Good evening and welcome to the Money Show. I'm Kavita Thapliyal and this is the place where money stops being confusing and starts working for you, because let's face it, every decision we make, from the coffee buy in the morning to the home we dream of owning, from planning our next holiday to secure your child's future, has one thing in common, that's money. Yet despite the role it plays in every chapter of our lives, very few of us were ever taught how to manage it, grow it, or make smarter financial decisions. Now that's where we come in. Whether you are just starting your financial journey, building wealth, investing for the future, planning for retirement, or simply trying to make your salary stretch a little further, this is your show. And this is your show because every week we'll cut through the jargon and noise and bring you practical advice from our experts. And this is the show where we also answer your portfolio queries. So just in case anything about investment, insurance, tax, or any financial goal that you want to achieve, you want an investment strategy, send your questions on the WhatsApp number that we'll flash on the screen, and the email IDs 865-797-4571 is the WhatsApp number. The Money Show at etnow.tv is the number, is the email ID where you can send across your question, and we will help you align all your investment strategies with all your financial goals. So that's the show. And we not only talk about investments, we also focus on insurance. We also have a senior citizen special on every Tuesday where we help seniors achieve all their post-retirement dreams, financial dreams, and help them live a very healthy financial life post-60, post-retirement. So if in case you want help from our experts to do that, send across your questions on the WhatsApp number that you've just seen and the email ID. But it's been another fascinating stretch for the markets, from shifting global cues and earnings to changing investor sentiments. Now, there has been no shortage of developments, keeping markets participant on their toes. Now, in an environment like this, cutting through the noise and focusing on what truly matters has never been more important. And that's exactly what we are here to do today. Joining us is someone who has spent years helping investors make sense of markets beyond the headlines. Aparna Shankar of the wealth company Mutual Fund brings deep expertise, a sharp perspective on market trends, and a practical approach to navigating uncertainty. Aparna, hi, good evening, and it's a pleasure to have you on the show. Okay, so first, a very basic question. Now, from a CIO's lens, I want to understand how is market placed right now, according to you?
So good evening, and thank you for having me on the show. Everybody has this question in mind, and what we see is that the markets are really very dynamic. I won't say volatile because that's then when you say volatile, there are sharp, uptrends and downtrends. That is what we are not seeing here currently. I say dynamic because there has been, some of the sectors are doing well one day, some other sectors are doing well other day. What we feel is that from here onwards, markets is into a good momentum, and earnings have to support the kind of momentum, the longevity of this momentum. And what we see is maybe the last quarter, we were expecting a large, kind of cost pressures on many companies, which we had started reflecting. In this quarter, it was expected that the cost will be very, kind of accelerated or very high. But the companies have been able to do, business with better cost efficiency. Some of the cost pressures have been passed on to the customer. Some of the cost pressures have been, kind of compensated by being more efficient. And as a result, we are not seeing huge pressures on margins, and that's a very positive factor. I would look at it, and if this continues, next few quarters will be really very good earnings growth is what we are expecting, which will maintain or keep the momentum of the market, good.
Taking a leaf from the answer, because you stress so much on the earnings, definitely decides the momentum, because that is all we have as far as domestic cues are concerned for now. But having said that, so can we sum it up from your lens that earnings so far are as expected, in line with your expectations?
I would say that they are a little better than our expectations because we were expecting higher margin pressures on lot many companies, which is not visible. I mean that's a positive surprise for us.
Sectors you want to highlight where you got a positive surprise?
One very, kind of we were a little worried about this sector was auto ancillaries,
Okay.
autos, and banking was not so much of a worry because I mean, RBI had taken a lot of initiatives which, will start reflecting in some quarters in the sustainable margins for the banks. But I think the consumption and the consumer facing businesses, we were expecting that there will be a lot of pressure, but which is not visible.
Uh, what about the valuation gap, across market segments, across market caps, large, mid, and small cap? What's the valuation gap that you are noticing?
So valuation gap, I mean, it's a relative term, I would say, because the small cap have had much better earnings growth. And I mean, we understand that, whatever is, doing great or growing much better will not come cheap. And that's why the small caps and maybe some part of the mid cap are trading at a elevated valuations, while some large caps, because these are mature businesses, there are less scope of positive surprises. The valuations are in a range bound territory, is what we feel.
Mhm. All right, but then, for people listening to you and especially retail investors who've had their money, whether through direct equity or through mutual funds, there is a value trap, and there is a growth at a reasonable rate. How would you like to explain this to our viewers who are right now maybe thinking about what is good in the market for them?
See, I usually say this that good things don't come cheap. And I mean, this is, kind of a very cliche that everybody is aware that India is one of the fastest growing economy in the whole globe, and which will continue to stay so for many more years to come. And if that is the case, I mean, if you look at even global investors, they are also finally asset allocators. And they also understand that wherever there is a growth, valuations will catch up. And we have in the last, kind of corrections what we had in last few months has in even not in absolute terms, but in relative terms, India has become more attractive. So I think that we are very, kind of closer to the point that money outside, residing outside India will start coming, will get invested again into India. It's closer than farther is what I can say. I won't say that this is going to happen next month or next, week or something like that. But I think if you look at even global investors are asset allocators, and India has become attractive from valuation perspective. And if the earnings continue, I think it will continue to stay attractive for all the investors, domestic investors and international investors also.
I will come back on the FII bit, but I want to talk to you about IT. You seem to be having a very cautious and a tactical stance on IT due to declining ROE and AI disruptions. Do you still maintain that stance? And if yes, what specific signs or metrics will make you comfortable shifting back to IT and maybe having it in your core portfolio as an allocation?
Correct. Correct. So it is part of our core portfolio in a sense, but it has become a tactical call. So we have some IT stocks in our portfolio also. I would, kind of go a little back and maybe not this last 2 quarters or 3 quarters, but maybe 1 or 2 years. What we have observed is that IT companies were on a downward trend for the ROEs and ROCs. Okay, that is because the mid cap companies were giving, kind of a competition to large cap companies. As such, the business, for multiple reasons, the pie of the business was not expanding as we would love to have that expansion, and that's where the competition was hitting up. And that's where we had seen lot many mid cap companies has had done better than the large cap companies, growth wise and even margin wise. But as a whole sector, the if you could kind of observe it very closely, the margins were trending down. The margins were not at a higher level which maybe 5 years back were, and it was obvious that the sector will undergo valuation re-rating, derating, or maybe the